What's good, YouTube? We're back again with another AMC video. Everybody's concerned with the Mudrick Capital private sell-off to the shares, to having raised capital of $230 million for AMC from Adam Aron's part. Everybody's like, what's happening over here? To me, this doesn't matter at all. This doesn't have any effect in the price, and it was pretty obvious because we still consolidated around the $30 range. We closed at 32. Currently 31.84 after hours. It doesn't matter at all. Listen, people are actually talking about this massive red candle right here over 33. The massive red candle, as you can see right here. And people were talking about how Mudrick Capital bought at 27, that sold over the 30s. People speculating over here. I can't see the time in sales because we're already way past it and I can't check it out. I would have to scroll down massively. Now I don't have the time for it. But I'm very certain it might be around that range given that massive candle. So if they bought everything today and sold it all at once, and let's say it was an overvalued stock because AMC is running this high, which is shady in the sense that people were trying to connect it to the ties with Citadel. Listen, it doesn't matter. It doesn't matter given the fact that we're still consolidating over the 30s. Think about it. We just have to hold. They actually have to pay an interest on their borrowed shares constantly. And at the fact also that BAM Investor, according to his BAM model, we have the possibility of, if we hit that retest at 32 and we consolidate 32 vibration. When he uses the term vibration, he means consolidation, basically vibrating around that range. His model says if we stay around there and be above 32, consolidating for a good period of time, we could actually see big moves, guys, like big moves. I remember he actually talked about it previously being at the 90 to 110, but his new data is actually showing 280 to 295 around the time of maybe around the time of next week. So that's very interesting to see. And if you're thinking, damn, this is way too high, this is unrealistic, what the fuck is happening? Like, what? That's not possible at all. Well, listen, this guy was saying it was going to hit 32 when it was at the $16 to $17 range. And his model got it precisely. It passed 32. Now he's talking about it. And he's actually had this model talk about it very precise when it comes to the zone of strengths, when it comes to the zone of weaknesses, and what he calls the vibrations when it comes to the consolidation. So now his model is saying that it needs to hit the retest of 32 and have the vibration, the consolidation around that range, over it actually, for a good period of time so that we could actually hit a retest of these higher price points. So of course, let's get to the 50s first, in the 70s, $75 range. I did see somebody put it with the Elliott wave theory, talking about it getting to 75 if you want to get some other type of model. The Elliott wave theory says it's going to get to 75 close enough soon. So he has it over 200. So we're in the best position we've been in, guys. So stop being so concerned about this. What is Adam Aron doing? He's raising capital. He just got a free $230 million. Like I just saw Roach Capital, however you say his name, my bad. He just said that he got a free $230 million basically because those people bought and sold. They had ties to Citadel. Who cares? At the same time, they didn't really affect the price going under 30. We're over 30. We're in the best position we've ever been. We still have a 10 out of 10 short squeeze. They still keep adding to their short positions. The amount they return compared to the amount they borrow is way more, guys. And this is important because I feel like people are so scared about the fact that it's not going up. Yeah, it's consolidating. We should have those good periods of consolidation, especially before the short squeeze actually takes place, before we actually have bigger gamma squeezes. And we actually get these contracts in the money, which will just help us along with the buying pressure from FOMO. So when it comes to the Fed draining over $480 billion in liquidity via reverse repos, you know something is actually very seriously happening. Because just take into consideration the fact that these people are so concerned with the demand for treasury securities. I don't know why this keeps popping up over here, but my whole point is talking about the treasury securities. The same type of supply and demand issue we have with, we're talking about with AMC. Banks really want these treasury securities, and they're draining all this massive liquidity they have through reverse repos to the Fed because they really want these treasury securities. So there's a demand issue right there that they definitely want them. So think about the fact that it's not only the potential of short squeezes on heavily shorted stocks like AMC and GME. There's this massive issue with treasury securities and the amount of liquidity being drained through reverse repos to the Fed. Also, that is very, very important, not just because it's about AMC and GME. It really goes to show and proves the fact that there's a massive amount of what the fuck margin, like it says over here, over 300 billion in margin this year. It's actually over 800. When I remember seeing over here, it says it. At April, we had reached about 850 billion. I hope you can see it. I don't know why these ads keep getting next to it, but it's talking about, we know leverage is crazy high right here. Let me actually highlight it right here. We know leverage is crazy high. And we saw it when it came to, finally, let me take this off. Why does it keep popping up? So it talks about it, the insane amount of leverage being crazy high, and the fact that we knew about it when it came to Archegos. Well, guys, Archegos is only just part of it. Over 850 billion it was that it reached at April, as you can see right here. When it comes to the margin debt, if you actually want to see a chart, we could, my bad. Let me go right here, margin debt 2021. We could actually see the correlation right here between the S&P and the margin debt. Let's look at this, guys. This is crazy. This is crazy. As you can see right here, 2021 over 700 billion. It's actually over 800. This one is a bit delayed. It's December. 2021, it's over 800 billion compared to the all-time highs of the S&P. So you can look this up. This actually has to do with FINRA. So you know this is for real. And this just goes to show how over leveraged in margin they are. So if you're wondering, damn, is it just AMC or GME? No, they've been shorting a lot, especially given how they thought many companies were going to be bankrupt because of COVID and all that stuff, right? But it turns out many succeeded, actually survived is what I'm trying to say. And it hurts their short positions. So if they keep adding at this point and you're just holding and you're at a better position, because this is at 30 at this point, and they were very, very messed up at 12, the $20 ranges. Guys, we're in the best position we've ever been. Let me know down below in the comment section your thoughts. I wanted to share this because it's definitely important for people to realize it doesn't matter what Mudrick Capital did, selling them and saying AMC is overvalued. Who cares? It doesn't matter. We know this isn't about fundamentals. This is about a short squeeze. This is a swing trade for the short squeeze. And it's still going to happen. It's inevitable.